Hey there traders, today I'm going to show you how to actually grow a small Forex trading account when scalping. Now, the first step of growing your account is choosing the right broker. Without a great broker, you're pretty much without hands. You can't do anything. They manipulate you and steal your money. So you need to choose the right one. Low fees, low spread, and fast execution are three things to worry about, but also the leverage it provides as well. Because you have a small account balance, you really want to borrow more money from the broker to be able to build it quick. And after you manage to build your account size to something sizable, you can then start to minimize your risk a little bit more and keep the account growth going. Here's 5 brokers that are pretty good, but the one I would choose is probably FXTM because they actually provide accounts with 2000 leverage, believe it or not. Now, the second most important thing is developing your own trading strategy or using the one I'm about to give you. 8, 13, and 21 exponential moving averages. The idea behind it is quite simple. You find the overall market direction on the 1 hour time frame. In this case, clearly it's heading towards the downside, and then simply use the 15 and the 5-minute time frames to get a more accurate entry. So for the 15-minute time frame, it's respecting the moving averages and heading towards the downside. And for the 5-minute time frame, this is where you want to enter. You obviously want a bearish engulfing candlestick as confirmation, maybe a shooting star, and a recent rejection of exponential moving averages to confirm the trade. So let's say 1-to-1 risk reward, 5 pips stop loss, 5 pip take profit. You of course want to find the previous area of sensitivity, which is around here, and you want to aim for that because likely once touched, the market could potentially respect it. So that's where you want to close off your trading position. Now let's see what happens with this trade. It continues moving towards the downside and actually reaches our take profit level. And as you can see, it actually respected the previous area zone, although not for long, and it was broken with that huge red candlestick over here. It still respected it, and that's why you want to close portion of your trades right there. But this is not the end. You always want to maximize your pip gains, right? You don't want to just profit 5 pips. So what you want to do is portion size everything. Once you reach your 5 pip take profit, take 80% of your position and close it. Now leave the remainder 20% running because you don't know how strong the volatility is and how long the bearish momentum will continue. And you can actually profit a lot more money because you have already entered in a favorable time. So what you want to do is only close off your trading positions once candlesticks close above the middle exponential moving average line. So we are pretty much already tripling our profit just over here, and let's see where we would actually close it. And it continues moving towards the downside, and this is why it's so powerful. So as you can see over here, the 13 exponential moving average or the middle line has now been crossed. So this is where you probably could have closed your trading position. So around 17 pips profit, from 5 pips to 17 pips, which is pretty damn good. It's extra money. Of course, it's only a portion of your position, but it's extra money to gain. Why not? While we're on this trading topic, another thing to mention is when you're scalping, you want to be only doing it on major currency pairs such as Euro USD, GBP USD, and USD Japanese Yen. They're my favorite personally. They usually have tighter spreads and higher liquidity, so you can potentially profit quicker because on some brokers, Euro USD has 0 spread, which is amazing. Now you may want to use your own trading strategies, so make sure to backtest it. Yes, the previous results don't help future results. However, you want to find proof of concept. If it worked before, likely it can work again. And if you backtest a trading strategy and it has 25% win rate, well then what are you doing?
Me? Just hanging around.
Okay, so now let's discuss a trading journal and why you need it. When you monitor your trades, you can find improvements, which trades did well, which did not. You can then find a potential pattern and kind of ride the wave with it. So it works for 2 weeks on Euro USD, and then next week Euro USD sucks, but GBP USD is performing well. This is why you want a trading journal, to monitor your progress and adjust as needed. So what do I have over here? Initial balance, let's say $250 we're starting. Euro US dollar, entry, stop loss, take profit, risk per trade you are taking, so position size, pretty much the same thing. Also monitor the trade outcome, whether it was a win or loss, spread cost, it will be different for everyone, right? Profit and loss, and current balance. This is what I like to start with. And then if you had a profitable trading day, you move on to the next day and you start with GBP USD. Do the same thing, and obviously you can increase the lot size by a little bit if your account size grows because you want to grow it quicker, right? So this is the very basics, but you can go much deeper. Also, a lot of people ask me what lot size I should use. Use Baby Pip's tool. This is a position size calculator. US dollar account size, you put it in 250, you want to risk 5%, let's say, and your stop loss is 5. You can say 7 because of spread, right? And the currency pair you're going to be trading, you're going to be risking $12.50. Standard lot size 0.25. This is what you should be doing when scalping. Always monitor your risk management and you will do fine. So another thing I want to mention is don't overtrade. I'm serious, I'm talking to you. If you take one trade and it's profitable, move on. You had a great and successful day. Enjoy it. So this comes with the next topic: limit your trading time. Before the trading session starts, you look at the market for 1 hour. You find the currency pair you like to trade. Let's say we want to take Euro USD. We are waiting and seeing how it's moving, whether it's respecting moving averages, whether it's very volatile, whether it's continuously moving in a consolidation. You need to watch the market. After you're mentally prepared and ready to take on the market, set 30 minutes of scalping time, and this is all you need, especially if you're a beginner. This way you won't be mentally exhausted and you will want to trade the next day as well. You will always keep your mind fresh, which means you will be sharp in the markets, and when you're sharp in the markets, you make money. So if you enjoyed this video and found value, give it a like, and if you want to see me live trade with the exponential moving averages, make sure to watch this video next, because I use the small trading account to just show that everything I'm talking about actually works.